Hi, how you doing? It has been a while. So, since my previous video was about journal in accounting, as also well known, it's a book of original entry. Therefore, in this video, I'm gonna bring out a relative of the journal, which is the ledger, or I personally named it. It's as journal's brother. You know why? Let's find out in this video. Okay, as our culture, we're gonna jump start with a question. What is the ledger, and why did I call ledgers a journal's brother? So, in the nutshell, ledger are records that categorize and illuminate all the entries of journals. Now, as you are watching at the visual aid at the bottom of the slide, there are two ledgers. It is the cash and the owner's capital ledger. Those two ledgers are derived from journals, as well as we must be using all the information from journals to create ledgers. Therefore, that is the reason why I call ledgers a journals rather personally. Furthermore, the ledger has been known by people as a name that is the second book of entry. Speaking of relationships, in the next slide, I'm gonna illustrate how does the relationship between journals and ledger work. So in this slide, we're gonna dig deeper into the question, why do we need ledger while we already had journals? So since my previous video, Journal in Accounting, we already knew that whenever the transactions occurs in a company, the accountant will report it in the journal firstly and chronologically, right? Now, I want you to gander at the visual aid in the slide. We can easily realize that the general journal is containing two accounts that was affected on January 25th, right? Then now, we look down, we can see that the general ledger is containing two sub-ledgers, that is the cash and owner's capital. As a result, we can recognize that ledgers are showing us two pictures of the cash account and the owner's capital account into detail. Am I right? So now, you might be confused that the ledger might not be useful and effective as we were expected, right? So, to clarify this thought, let's put an example out there that you own a manufacturing company. Therefore, there are thousands of economics events of the ins and outs per day, right? Then, the end of the day, you just need to check on the cash to see how much cash has left to be in order to prepare for tomorrow's purchases. So it is very messy if you go through thousands of economics events in the journals to just calculate the cash account. Third, the cash ledger will show you how much cash has been left into detail at the end of the working day, especially like in the picture. So in addition, if you are still feeling hard to absorb this, you can imagine that if the journal was a book, the ledger would be chapters of that book. Easy, right? Okay, so now in my question, how many kinds of ledger do we have? So clearly the answer is that there are two kinds of ledger in accounting. It is the general ledger and sub-ledger. The sub-ledger is like the account payable ledger, inventory ledger, and so on. Finally, the general ledger consists of all kinds of sub-ledgers. That is all. Now, next, I'm going to share with you guys 5 steps to create a ledger. So, I need you guys to stick with the number in the slide. Step number 1, transfer the date from the journal to the ledger. It is too easy, right? Step number 2, there are how many accounts were affected in the journal during occurring economics event. Then that many ledgers will be created. As you are seeing in the slide, we got two accounts that was affected in the journal. Therefore, two ledgers were created. It is the cash and owner's capital ledger. Step number 3, the journal code A1 will be transferred to the ledger reference column. It helps us know which journals that the ledger is derived from, as well as saving time for searching. Step number 4 and 5, we just need to transfer the ledger code 155 and 133 from journals to the cash and owner's capital ledgers respectively. And that is all you need to know about how we can create ledgers in accounting. So this is a practical problem. There are 5 business transactions, and you guys need to record all those business transactions in the general ledger. So try it out first and then compare it with my answers, okay? It is the key for the first transaction. This is the key for the second transaction. This is the key for the third transaction. This is the key for the fourth transaction. And this is the key for the final transaction. So this is the overview of the general journal after 5 business transactions. So to check the accuracy, we just need to compare the sum of all debits and credits. If it is equal, it means you are passed. If it is not equal, it means you have to do it all over again. So this is the overview of the general ledger after 5 business transactions. So to check the accuracy, we do the same method as we did at the general journal, which is to compare the sum of all debits and credits. Okay, so to sum up this topic today, firstly, the definition of the ledgers and 2 kinds of ledgers in accounting, which are general ledgers and sub-ledger. Secondly, the ledger is also well known as the second book of entry. Moreover, I personally named it as journals brother. It means they are hand in hand. Finally, there are 5 steps to create ledger by using journals information, and that is all. So this is the end for this video, and the next video will be about the trial balance in accounting. So thumbs if you like it and sub if you love it, and see you in the next video. Peace.